start the session. Ladies and sure. Thanks, Viraj. Ladies and gentlemen, good day and welcome to the STL Q4 FY21 earnings conference call. I am Pankaj Dhawan, Head Investor Relations at STL. To take us through the results and to answer your questions, we have with us Dr. Anand Agarwal for STL. Please note, all participant lines are in the listen-only mode as of now. There will be an opportunity for you to ask questions after the presentation concludes. Please note that this call is being recorded. You can also download a copy of the presentation from our website at stl.tech. Before we proceed with the call, I would like to add that some elements of today's presentation may be forward-looking in nature and must be viewed in relation to the risk pertaining to the business. The safe harbor clause indicated in the presentation also applies to this conference call. For opening remarks, I now hand over the call to Dr. Anand Agarwal. Over to you, sir.
Thank you, Pankaj. Good day, everyone, and thank you for joining us for our Q4 FY21 earnings conference call. First of all, I hope you and your families are all safe and healthy in these difficult times that we are seeing in India. Now, coming to the business, last quarter, we continued to see investments in the digital network space. Among the telcos in India, we saw Airtel announcing to invest more than 30,000 cell sites and large-scale FTTH rollout this year. China Telecom has earmarked almost $13 billion capex, out of which a significant part will go towards the 5G. Also in the US, what we are seeing, the big three companies, AT&T, Verizon, and T-Mobile, have announced higher capex spend for this year significantly as compared to the previous years. We are seeing continued investments from other segments also, like cloud companies, private equity, as well as citizen networks. And the notable amongst these has been the announcement by US President Joe Biden to spend almost $100 billion over the next 8 years to expand the high-speed broadband access network to the entire US. And we've continued to see strong investments by private equity investors in investing in both greenfield and brownfield digital networks. As we have been maintaining over the last several discussions, we are now seeing the beginning of beginning of a decade of network creation cycle powered by such large investments, and the investments are expected to strengthen as we move forward. In terms of the technology drivers for these newer age digital networks, we are seeing that the networks are moving clearly to the edge of wherever the consumption is. And newer technologies are powering these newer age digital networks. So 5G is clearly getting into the mainstream, both in terms of usage as well as deployments. This year, we saw almost over 163 commercial deployments for 5G happening globally. And with this, 5G has become the fastest technology to reach 400 million subscribers. While just to provide a perspective, 2G took almost 30 quarters, so 3G took 25 quarters, 4G took 17, and 5G has taken just 5 quarters to reach this number of 400 million subscribers. And on this, we are seeing increased capex across the globe by most telecom companies. In terms of fiber to the edge and fiber to the home rollout, Europe continues to witness a furious FTTH build, with multiple operators doing more than 1 million homes every year. Just to give a few examples, like Deutsche Telekom plans to deploy more than 2 million new FTTH connections in the current year, And additionally, Telefonica Germany in the same market plans to deploy 2.2 million rural connections in the next few years. In US, AT&T is deploying more than 3 million plus fiber to the premise and business locations, access across more than the 90 cities in the current year. One major shift that we've been continuing to talk about is the shift that is happening with the open radio access network, the ORAN. And in line with our expectations, it is making inroads with major communication providers, either starting to deploy or continuing to do furious trials in integrating this new technology in their networks. Again, Verizon is starting to deploy ORAN in terms of commercial deployments this year. European operators such as Deutsche Telekom, Orange, Telefonica, and Vodafone have joined forces to support the rollout of Open RAN in their future mobile networks. And the same sort of trials, the same sort of focus we are seeing in India also for Open RAN deployments for the 5G when it starts coming in, hopefully in 2022 in the country. So that's about the newer technology. If we see that in terms of optical fiber, what we are seeing is buoyed by the implementation of such new technologies. OFC demand is showing sustained long-term growth and is expected to sustainably grow over the next several years. We've seen the current CRU projections talking about a longer term growth projection over the next 4 to 5 years. And this growth is across the globe in different geographies. If we look at the various markets, this year the demand in India is supposed to grow by 19% on largely on back of increasing cell site connectivity, increasing FTTH deployments, as well as deepening connectivity for rural and semi-urban deployments. The geographies like Europe, it is expected to grow by 7% year on year on back of the FTTH activity that I spoke about. North America is the deployments are going extremely strong, and it is expected to grow by 8%. And in the China market, which is a significant market, is expected to grow by 4% on the back of almost between 600,000 to a million 5G base station deployments that will happen this year. Now we shall now talk about how these industry events which are happening, how STL is using this momentum as a springboard, as well as enhancing our capabilities towards delivering to this new ecosystem that is emerging. So one aspect clearly is the aspect for us in terms now with a wider portfolio, our addressable market that we've been talking about for the last several quarters has been increasing every year. Now we believe now we address an overall market. Our total addressable market globally is of the order of about 40 billion US. And this has significantly grown with the addition of optical connectivity and interconnects to our portfolio. If I just give a breakup, in optical connectivity itself, the market opportunity globally is now between $18 to $20 billion, which is split between the cables as well as the interconnects, optical interconnects. With the fiber moving closer to the edge towards going to small cells, going to homes, going to enterprises, as well as the edge data centers, the interconnects is becoming a significant part of the portfolio that goes to the customers. And with the addition of Optotech in the quarter and the optical connectivity portfolio, our addressable market to the same customers now more than doubles in this segment. And our integrated Opticon solution, which goes in, is very, very vertically integrated from silicon to optical interconnects has full addressability to this market segment. So that's the largest of the segment where there is a large amount of focus for the company. The second segment that I want to talk about is the virtualized access products, the focus that we have on the wireless as well as the open RAN and open network movement. This market opportunity currently is standing at about 15 billion US annually. In terms of such subsegments, the open RAN as well as the small cell market size is close to about 6 billion annually. And the network software market, the disaggregated software market, which goes along with it, is about 10 to 11 billion. So in totality, this virtualized access and network software addressable market for us becomes about 15 billion. And we address this segment through both our 5G Open RAN based wireless radio ecosystem for both multi-band outdoor deployment as well as the indoor small cells. System integration services for us is a more geography-based market. It is the addressable market for us here is about 7 billion US. This includes all the four customer segments in India, specifically of telcos, of hyperscalers, enterprises, as well as citizen network, as well as the focused cloud segment in Europe, which we addressed through the acquisition that we had done for IDS a couple of years ago in Europe. So it's about a 7 billion. And so in totality, now our TAM has increased to about 40 billion US. Moving on, if we talk about the customer validation that we saw during the year, in FY21, we have won several marquee deals across both all the segments of the market as well as across various geographies in the world. In the last quarter, we are extremely proud of signing a multi-year strategic partnership with Vitti OpenReach, which is UK's largest digital network business, to help build its new full fiber network. And we are going to be delivering millions of kilometers of optical fiber cable to support the network build over the next 3 years. And this is a 3-year partnership which has been signed with BT, and we are the most favorable partner for them for this rollout. In terms of our virtualized access products and network software, we have partnered with a leading US telco, both to develop as well as manufacture comprehensive 5G Open RAN new radio products. As a part of this partnership, STL will initially deliver dual band and tri-band radio units specifically designed for this customer. And additionally, both us as well as the customer have agreed to collaborate on an open architecture suited for enterprise solutions, as well as other ORAN initiatives such as the RAN Intelligent Controller, which increases radio efficiency as well as service management and orchestration. And as we had discussed in the last quarter, in the system integration services business, we are partnering with Airtel to design, deploy fiber across 10 circles in India. We have also won a multi-year contract for Opticon solutions from DU Telecom in the Middle East region, and we have also won a large digital transformation project for a leading telco in Africa. All of these marquee deals validate our strategy to focus on key account, and it is working in the right direction clearly. And we've been able to win these marquee deals on the back of our world-class portfolio. And in the year, we've made a significant addition to our optical interconnect portfolio with the addition of Optotech. And the product range now includes the full fiber management systems for bringing fiber to the edge. These products enable much faster and reliable connectivity for all such fiber to the edge solutions. In terms of technology, we have also developed new value-added products and technology-led solutions organically by continuing to invest in technology. In optical connectivity, as I said, our Opticon solution fully extends our vertically integrated portfolio. We now offer end-to-end a full silicon to Opticon solution with our own glass, our own preforms, fiber, cable, and a full interconnect portfolio. And this includes our first in the world developed stellar fiber, which integrates the next gen requirements to the legacy fiber deployments which have happened. In the virtualized access products, we have launched Garuda, which is a smart 5G indoor small cells. STL Garuda seamlessly complements the network capacity, density, as well as the coverage of macro networks, and serves as a single board optical to radio interface solutions for 5G low power picocell applications. This ORAN 7.2 split small cell can handle more than 30 concurrent user devices and can be backhauled across several kilometers. Moreover, the way it is designed, it can be installed within 30 minutes and deployment can be as seamless as that of a simple Wi-Fi access point. Another important solution that we have unveiled is an end-to-end multi-band radio for the next generation 5G networks. It is a comprehensive Open RAN solution spanning across radio unit, centralized unit, as well as the distributed unit. And STL is now one of the very few in the world to offer a comprehensive 5G ORAN solution. In the system integration services, we launched our Lead 360 2.0, which is our fiber rollout solution. This new version of Lead 360 uses robotic process automations, drone surveys, as well as AR/VR based digital training and integrated remote field management to ensure both fast as well as extremely efficient rollouts. All of these new product developments was made possible only due to the investments in R&D as well as new IP developed by our technology teams. Our R&D spend now is becoming significant year on year, and it stands at over 3.1% of our revenues in FY21. We filed close to 200 patents in FY21, which is almost double of what we did in the last previous year. We had done about 96 patents in FY20, and it has taken our overall patent count to 569 at the end of FY21. We are also very happy to announce that we got our 5G patent approved in US for photonics abstraction interface that enables programmability in 5G front haul applications in an extremely vendor agnostic manner. So moving on to the delivery, we have also delivered and executed across all of our projects despite the challenges posed by the pandemic. The status of our key projects at the end of last year is the project Varun, which is the Indian Navy project, is now more than 92% complete. The Mahanet, which is the rural broadband project, is the first phase is almost fully completed at 98%, and the second phase is at 61%. The new project that we got in Telangana for T-Fiber has started off at between 18 to 26% completion. And the fiber rollout that we are doing for Airtel is more than 40% completed. In addition to that, we did several rollout projects for across data centers in Europe through a data center interconnect company in UK. In terms of the new projects and the expansion, we have kept up pace to deliver the OFC capacity to 33 million kilometer. The project clearly is on track, and as we had committed, the project has moved in modules. So we are already running at a capacity of almost 25 million kilometers, and by the end of this quarter, we plan to have reached the capacity of almost 33 million kilometers. And the project is on time, both in terms of timelines as well as budgeted costs. All this is getting made possible by our world-class talent. We are able to deliver on all of our commitments because we have a great team, and we've been fortunate to continue to attract exceptional talent from across the globe. Throughout the year, deep industry experts have joined us across the globe. And I'm happy to share that in the current quarter, Chris Rice has joined us as the CEO of our Access Solutions business unit. As you know, that we launched the Access Solutions BU, focusing on Open RAN, 5G, programmable fiber to the edge, as well as the controller orchestration software. Chris brings more than 25 years of experience in the domain and the industry. Prior to STL, he was associated with AT&T, where he delivered on a multi-year technology strategy and vision for both the networks as well as the underlying systems evolution. He also led AT&T's pivot to software-defined networking, leading the team that built the fundamental automation and platform capabilities to drive this shift. And over the last year, we've strengthened our team with leaders from across the world, driving great industry as well as market expertise. Along with talent, the strong focus on the environment, sustainability, and governance continues to be extremely important to us. Among the key CSR initiatives, we have launched a telehealth AI on-site hybrid program covering over 200 villages across Aurangabad, Nandurbar, as well as Gadchiroli regions. We have launched an EdTech program to bridge the digital divide, ensuring over 100,000 children have access to quality education across 300 schools in Aurangabad, Nandurbar, as well as Silvassa. And we continue to work in a very sustained and focused manner towards a cleaner as well as greener future, towards a target to impact 5 million lives. In the year, as a result of our efforts, we've also won the DuPont Safety and Sustainability Award for Zero Waste to Landfill, which is now featured across all our cabling facilities. We are also making sure that we are leaving no stone unturned to help our communities in these difficult times, and we continue to provide support in all forms possible to the local communities in which we operate. We shall now talk about the three growth levers that shall drive our future growth. The first growth lever is to grow. Clearly, the focus is on growing the fiber cable OFC volumes as well as the optical interconnect business. If you look at our global market share in OFC, we have steadily increased it from about 1.5% to 5% over the last 20 quarters. Specifically, in FY21, our volume grew by over 35% in a flat volume industry for the cables. And this has been made possible by gaining a higher share of business in our key accounts. And going forward, this will continue to be a key driver for growth. And as we've been maintaining in the optical interconnect business, we will leverage our existing customer relationships across the globe to expand the business going forward. This will happen through our integrated Opticon solutions, which is becoming a compelling value proposition to our customers. So this is the first lever. Then the second lever is to take the system integration business global, while at the same time scaling in India. If you look at over time how we have grown this business, we started with deploying large haul networks for Indian Army as well as the citizen networks. Post that, we modernized complex pan-India networks for the Navy. And in the next phase, we designed as well as deploying fiber networks for cell site connectivity as well as fiber to the edge solutions in large Indian metropolitan cities for telcos, and also provided data center solutions to the cloud companies. Now, moving forward, we are planning to undertake take this expertise and capabilities to more global areas. And as a first step, we are entering the UK market. We started building our team and are in advanced discussion with our customers for taking this forward for revenues in the current year. Uh, and along with building this business, what we are talking about Europe, the focus in India to deepen the market and to scale the portfolio and offerings continues. And the third and a very exciting lever is to scale our virtualized access solutions business. We are building a world-class team by leveraging a team of exceptional professionals and ecosystem partnerships. The current team strength is over 200, and we continue to grow month on month in this area. In in terms of our endeavor is to become a product of choice for large-scale O-RAN deployments in 5G networks. We have already shared that we have partnered with a leading telco in the US to build a greenfield 5G network based on Open RAN technology. And currently, the trials are being conducted at the customer premises. So just to summarize, our three growth levers are one, grow the fiber cable and optical interconnect business. Second, taking the system integration business global as well as scaling in India. And third is building a strong access solutions business based on the disruptive open source products. With these three growth levers, we are extremely confident that we shall achieve the market share and targets revenues that we have talked about. I'll now hand over to Mihir to discuss the financials.
Thank you, Anand. Very good evening to all, and hope everybody is safe. What I will do in the next few minutes is to show how all the efforts that have gone in, as Anand described, how that translates into financials and eventually how we create sustainable value for our shareholders. So jumping right into it, I think right at the top of the final outcome is the participation funnel. As you see, our open participation funnel has grown by 50%, more than 50% in what was a difficult year. Our open participation funnel stands at 11,500 crore, which just shows that the demand for our solutions and the industry in general is very, very high. What that translates into is a stable and healthy order book. Our order book stands at 10,700 crore, out of which about 5,500 crore is executable in FY22, and the rest is FY23 and beyond. Part of the open order book is relating to the warranties, the maintenance part. 25% of that is relating to that. So therefore, that extends over a much longer period beyond the immediate year or two. Our customer segment is also well balanced across in the order book. Moving on to revenue. Our revenue split here is in the direction that we want. If we see the bars on the right side, our geography mix shows that our share in Europe, in US, in the American market, Middle East has continued to increase, and that's the direction that we believe it will go. We've already spoken about, Anand did mention about the key orders that we won, so I will not get into the detail there. We can get into the next slide, please. So as you see, our Q4 revenue stands at 1,475 crore. That is a sequential 12% growth growth over Q3 and a good 27% year-on-year growth. Essentially, the way is what I would want to highlight, that we are back on the momentum to keep growing. This has been a EBITDA of 273 crore with a PAT of 124 crore. Essentially, our OFC capacity utilization is continuing to grow Q on Q, and we will maintain that momentum. And overall, we believe that the next few quarters, and if I am specific, then the first half will certainly continue to grow for us. We continue to invest in our capabilities. As we see, we're generating positive operating cash flows, and we are using that to increase plant capacities, acquiring new capabilities. For example, the optical interconnect capability that we acquired, and we believe that with this phase, the debt will peak out in FY22, and post that the debt equity ratio will start to go down as we are fully invested from the current plan perspective. We've put the abridged financials for your perusal. You can have a look at it. These are available otherwise as well, but this is for a quick snapshot right now. So overall, I think on the back of all that Anand mentioned about the business, about our capabilities, the specific growth levers, I think I clearly believe that we are set to grow using the momentum in the digital networks business in the industry. I think the pace of investments is going up. We have the capabilities, and we will use the momentum of the industry as and on the back of the capabilities that we've built, which we continue to build. We will participate in that, specifically in the three levers that Anand laid out: our OFC and optical interconnect businesses, taking our system integration business to global markets, and then scaling up and building a strong access solutions business. The specific levers that we will use in the immediate term, and we expect the growth momentum to continue in FY22 as we invest in better R&D capabilities and grow at a healthy ROCE. So with this, we come to the end of our opening commentary, and we can move to the Q&A. Pankaj, you want to take it from here?
Yeah, sure, Meir. Yeah, you guys, ladies and gentlemen, you can raise your hand to answer your question, and we'll take the question one by one. So first question we are taking from the line of Mukul Garg. Mukul, you can ask your question now.
Yeah, thanks. Thank you for taking my question, and and good growth quarter. Congratulations on that. First of all, just wanted to get the basic data points on pricing and utilization on the OFC space. What is the share of product and services in Q4? What's the number, if you can share with us?
Mukul, been maintaining the capacity, and the numbers utilization is going up quarter on quarter. For the fiber cables, we talked about that it has grown by over 35% year on year. We have increased our capacity on the fiber cable side in a modular fashion, currently almost running at 24 million sort of run rate, and plan to maintain that in the current quarters. And as the new capacity 233 comes in by June, by H2 or so, we will take that forward. In terms of, as we've been talking, the products and services businesses are getting to a large extent integrated in several solutions that we are providing in services. But broadly, it is now close to 55-45% ratio to product to services. That's a very broad number because now in some of the offerings it's getting fully integrated.
Understood. And Anand, now that this quarter you had a 6 million plus quarterly overseas sales, and 24 million was the capacity, it looks like even this quarter you were operating close to 100% utilization even after expanding the capacity. How sustainable is this run rate? And given your visibility on demand and order book, do you think this can continue even in Q2 when you will reach 33 million?
So the demand continues to be strong. The order book continues to be the visibility continues to be high, especially on the products, the global segments that we have in. We believe the current sort of capacities definitely will be able to sustain, and the plan is clearly to grow from there in H2 with the new capacities coming in.
Sure. And if I may squeeze one more question, more longer term, Anand, while we have seen prices remain broadly stable in the industry in last 1.5 years, uh, it clearly looks like the demand has started recovering well across all regions. Do you have any sense of timeline when should we start seeing some sort of firming up on pricing front as well? Given that the volumes have started moving upwards.
I think logically it should start happening. At least uh, the ridiculous pricing, etc., at some point, which was happening, is no longer there. So whatever spot pricing people used to speak about, I don't believe all that is happening anymore. The lead times in key markets are starting to inch up. So logically, we believe that the price strengthening should be a logical step moving forward. At the same time, Mukul, as we have maintained, we typically do longer term contracts with our customers. So the impact either way is not so significant for us.
Sure. Thanks for taking my questions.
Sure.
Thanks, Mukul. We'll now take the next question from the line of Pranav Kshatriya. Pranav, you can ask your question now, please.
Hello, am I audible?
Yes.
Yes.
Yeah. Thanks for the opportunity. Sir, I just want to understand. Firstly, you talked about this ORAN solution as a growth engine for Sterlite Tech. Just trying to understand, who typically Sterlite will be competing against, when you are offering services in this space, and is it the connect with the company is a key driver for the growth in this businesses, and is displacing the existing player who are already servicing for most of the softwares? Is it easy? So how do you think, from a risk perspective, for growth in these businesses?
Sure, Pranav. Very important question. Clearly, so at a macro level, if we start seeing the technologies that we spoke about, 5G, fiber to the edge, and ORAN are all getting integrated. So any networks that are getting built right now are clearly converged network. It is no longer a mobile network or an optical network or a data center. It's all with 5G, the connectivity, the compute, and the cloud have all converged. So the wired and wireless network are being planned and being built at the same time. And the shift towards ORAN is a industry shift. It is a shift which is moving away from the proprietary technologies which used to be there in the industry. So the competition for that matter is at a macro industry level itself, shifting away from the proprietary solutions which used to be there. There are several newer companies which have come up in the ORAN space, like Altiostar, Mavenir, Parallel Wireless, and along with them, we are offering this integrated offering. especially started off with the early adopters of this technology and is now moving towards more and more names. So the offering becomes an integrated part, while at one end, optical takes it closer to the subscriber. The indoor small cell as well as the macro cells that we described takes the signal to the consumer devices, and it is becoming an integrated offering to the customers.
Sir, I mean, just to take that question a little further, if you look at somebody like Huawei or ZTE who actually came out with these kind of offering, they had to really build onto this capability for a much longer period of time because the technology change in the telecom network tend to be very slow and it takes a long cycle. And at least I see I mean, if I read something like lightreading.com or heavyreading.com, I do see Altiostar and Mavinair having a lot of space. So you think given they are reasonably well established, competing will be difficult. What could be the challenges for growth in this vertical?
We see Pranav we see more opportunities. So we see these people, Mavenir, Altista, more as partners rather than competition. We see the ORAN shift itself, the fact that the wireless market is all shifting towards ORAN. That is providing a larger opportunity for more and more newer players to get in. So it is very heartening to see that these players, new players, are coming up and growing, and it is in that same feet that we are moving forward. And as we said, we are working very closely with a new US 5G network greenfield solution. We'll be doing some announcements during this quarter itself. So we are at no point discounting the challenges and the difficulty of getting into this industry, but we've always looked at that, and it's a growth driver that over the period of the next few years will become a strong avenue for growth for the company. But we have taken a strategic decision and we are investing in that very, very consciously.
Okay, thank you. I have next, two small questions. One is, how should we see the capex for FY22? And second question is that you used to, disclose, the largest exabyte network, the progress, used to be there. For last quarter, it was 2%. Somehow, it is not there in this quarter's presentation. So I want to check, is that project, has discontinued or any update on that?
Sure. So from a capex perspective, the numbers that we saw last year, the number will this year be slightly in the similar range of about 400 to 450 crores in terms of some flow coming in from last year and the investments that are continuing to go. And after this year, the numbers will taper down extremely low. In terms of the exabyte network, the fiber to the home network that we talked about at 2%, currently that project is on hold. And as it starts restarting, we'll start reporting on that. But and that's the reason that we did not report it in the current quarter.
Can you just help me with the breakup of this capex? How much of that will be the maintenance capex and how much will be the growth capex?
About like maintenance is less than 65 crores. So the balance is all the growth that we are doing.
Okay. Thank you so much. That's it from my side.
Sure.
Thanks, Pranav. We'll take the next question from the line of Mr. Neerav Dalal. Neerav, you may ask your question now, please.
Thank you for the opportunity. I had a couple of questions. One is we are looking at a funnel, a large funnel now, but just wanted to understand how is the deal discussions going in India and overseas? Is there a difference? And in India specifically, have we seen a slowdown in terms of the government-driven or the enterprise-driven businesses?
Yeah, so Pranav, the flow, at least for the last year, we've seen it becoming much more global for us. We saw a more muted order book in the last year from the India public segment specifically. So the order book you would have seen that has been largely stable to about 10,700 crores. And in the open order book part, the both the international segment as well as the private segment in India has significantly grown. And the open order book with the contract that we spoke about, the Open Reach 3-year contract, the DU multi-year contract, the Africa contract, is all becoming significantly much more global for us.
Right. And just clarification on this. In terms of the funnel, what would be the India versus international split if you are sharing?
We are now getting close to, I think, again, it will be about 37-38% is global. India is about 60%. And if you see the revenue mix itself now, it's become for the last year, I think about 44% is global versus 56% India. So starting to mirror the revenue mix that we've been reporting.
Got that. And in terms of the Open Reach deal that we won, that is only a products deal. Are there any services in that, or are we working towards?
No, this one is a product deal. All.
Yeah. Okay. Right. And finally, on in terms of the EBITDA margins, we saw EBITDA margins decline Q in this quarter, and we've seen strong leadership addition. So how should one look at EBITDA margins going ahead into FY22?
So EBITDA margin, we are running at about 18.5% currently, and this is in spite of us increasing the spend to R&D of about 3.1% from about 1.2%. So I think we'll be in this range, closer to 17-18%, and R&D spend, especially on the wireless side, will continue to go up as we move forward. So, and as you know that everything for the newer businesses that we are putting in technology and R&D is all expensed out during the year itself. So the EBITDA margins will be in 17-18% range.
Got that. Thank you.
Yeah, thanks, Nirav. Ladies and gentlemen, may I please request you to limit your question to one so that more and more participants can participate. We'll take the next question from the line of Agastya Dave. Mr. Agastya, you can ask your question now.
Thank you, sir. Sir, most of my questions have been answered, but two questions. One is a follow-up. You mentioned that lead times are increasing. So can you quantify this, sir? Because from whatever I understand, most of the people, at least in India, are now either approaching 100% capacity utilization or are there. So can you quantify the lead times? If I place a large enough order with you today, when will I get deliveries?
So Agastya, it clearly depends on the accounts and the like for us, the focus is on key accounts, and for the key accounts, the order book happens faster. In terms of quantification that I was talking about, we look at different markets. So we are seeing North America, the delivery times extending to over 6 months now. Right. Europe extending to 3 to 4 months now. So it's more macro rather than. For us, I mean, we clearly provide room for our key accounts, and for non-ones, the delivery times would be longer.
So this was the 6-month number is the previous peak, right? When the prices were at the highest point, 6 to 8 months is what I remember. Am I right, sir?
No, I would say that at times the lead times have gone higher, but okay. I would not pay too much attention of lead time and correlation of that to the pricing. But definitely in terms of direction, it would move towards strengthening.
Right. And Dr. Agarwal, second question is on the visibility that you have on the progress on data centers and 5G in India. What are you hearing, sir? Uh, uh, Other than the trials which have happened in Hyderabad, what is the progress on the ground for 5G from the government side and from the payer side?
So I guess what we've maintained, we think in India 5G will start happening in second half of 2022 calendar or so, and we continue to believe that would be sort of a timeline where the rollouts in some fashion or degree will start happening. Hopefully, by that time, the spectrum auctions and the clarity and all that should start coming in, and the rollouts. So we are still about a year and a half or so away from that rollouts in serious form happening in the country. On the cloud form, we are seeing continuing to, other than the current challenges that the country is facing, on the cloud front, we are seeing frantic activity happening both with the hyperscalers as well as the infrastructure, the colo providers. So we believe that activity has already started and will continue to grow.
Great, sir. Thank you very much for your commentary, sir. And thank you, sir.
Thanks.
Take care.
Thanks, Agastya. We'll now take the next question from the line of Mr. Nilesh Dhamnaskar. Sir, you can go ahead and ask your question, please.
Yeah, hi. Thanks, Pankaj. I have a couple of questions. So one is on the balance sheet side. What I was seeing that in FY21, your current asset, the contract assets has gone up quite sharply, and the concurrent liability, which is the contract liabilities, have gone down. So the gap has widened quite sharply. What's the reason for that?
Yeah, Mihir, would you want to take this?
Yeah. Well, the gap has widened in an absolute sense, but from a relative to the both have gone up. If I look at it individually, the gap may have increased because the absolute magnitude has gone up. The reason for it going up is how certain deals have been structured, and therefore the link to the billing for those is milestone based, and those are still to come in, and that's the reason. There is once the contractual trigger comes in, that will correct itself. The good thing is we've kept the payables relating to that also going along, so that our net working capital is not bloating up because of the billing structure that we have.
So is it that some of the contract liabilities are getting reflected in the payables, which also has gone up? Is it that way?
That's correct, yes.
Fine. Thanks. And the other question is just have you noticing that the depreciation, quarterly depreciation rate has been going down over the last couple of quarters. So what's the reason for that?
So two reasons. One is that the Elite Core business that we had acquired and we were putting in the amortization of the goodwill, it has got fully amortized, and therefore that is a quarter-on-quarter dip that you see. The other reason is as we had disclosed, there were 2 quarter financials taken in our previous quarters, so relating to the Italian business, and therefore that had slightly higher depreciation, which was 2 quarter depreciation. That has also got corrected in Q4. So Q4 doesn't have the impact of those two, and hence that's the more representative number.
Good. And that this will be the recurring till the time your new capacity gets added to the gross block, right?
That's right.
Right. And if I may ask one quick question is the coming back to that working capital question. So what would be the overall on a normalized basis working capital intensity in terms of days now going forward?
So we are at about 100 days of net working capital. We expect that we will be so we'd endeavor to get it down a little bit, but you can assume anything between 75 days to 100 days. I think that's a good assumption right now.
Got it. Got it. Thanks. Thanks and all the best.
Thank you.
Thanks, Nilesh. Ladies and gentlemen, I would again request you to limit your question to the one. We'll now take the next question from the line of Saket Lohia. Mr. Saket, you can ask your question now.
Hello, sir. And first of all, I would like to congratulate because the way you have shaped up in the last couple of years. Also, the COVID has now passed now, and congratulations to all the senior members and the team. So my query is on the vision that you have been sharing for the last couple of quarters and years and been working on the same. If you would highlight mainly on the revenue part, how you expect for the next couple of years, have been reiterating the fact for the vision of 10,000 crores, as well as the debt that the management was expecting to retain to 0.5 or lesser levels, while still the debt is increasing. So if you could help us understand how that vision is now shaping up and will shape up, that will give us some idea as to where the company would be headed, please.
Let me address that. I think Saket. So first of all, thank you for your kind words. Regarding the 10,000 crore goal, I think that remains and that's been communicated, in the past. So directionally, that absolutely remains our vision and our goalpost to get there. What we want to share with you as we go ahead, and which we've been doing, is that how we're going to get there on a quarter-on-quarter basis, on a half-year basis, and that's how we are now looking at it and making sure that we communicate that to you as well. So while that vision remains, we are well on track through our next few quarters plans, FY22 plan and beyond, to make sure that we get to that goal on the revenue side. I will not get into the details of how. I think that we've shared with you in what levers will get us to that in the next few quarters. But at a macro level, certainly in on track towards that goal. The second part of that, again, the debt equity ratio, absolutely understand your question on the debt going up. But as we mentioned earlier, the capex will peak out in FY22, and from there on it will steeply decline, and that's when we believe the journey to the 0.5 debt equity ratio will start in FY22. We are quite confident of that milestone as well. So both of those remain. We're just focusing on how to get there over the next 3-4 quarters to start with and beyond.
Fair enough, sir. And the second and a follow-up question to that is, since you have mentioned that the capex will peak out next year, and we are already on a run rate of almost 2,000 crores, 1,500, 1,600 crores a quarter revenue. So do you think that the current or the future capex will be sufficient enough for the coming years, the vision that you have taken, or would you need more capex for achieving that vision? Just to understand the capex requirement for the company, if you have any idea on that.
So what we believe from a capex standpoint, from a brownfield, building our capacity standpoint, we believe this should be sufficient for now. We do not see the need to have more capex beyond what we are talking about, at least in the current thinking, which is the next 2 to 3 years.
Thank you so much, sir.
Thanks, Saket. Anand and me, we can take maybe a couple of questions which has come from the chat. So one question is from Akash Pipara. Is that global chip shortage going to be a challenge for 5G/FTTH, etc. deployment? Any steps to mitigate that? Will inventory inflate until this is addressed?
Yes, again, a pretty relevant question right now, and we are monitoring this chip situation very actively. At least for the current orders, etc., that we have taken, especially for the macro band and small cell order, that is all currently tied up. but we continue to kind of widen the supply chain and supply, so that the impact on someone like us who is just sort of starting off in this area is not there, or is not significantly there. And the inventory inflation, etc., won't happen again for us, because this the wireless and the access business is the significance to the overall revenues is still not there, and it will start getting significant over the next couple of years.
Sure. Thanks, Anand. Maybe we'll take the one last question, which has come from the chat from Mr. Mangesh Kulkarni. That how do we see risk of OneWeb like satellite broadband services coming to India and other parts of the world?
Sure. Yeah. So those satellite clearly coming is going to be complementing, and the clear focus of satellite is to connect largely the almost 3 billion people globally who are currently unconnected. So it will clearly complement and bring this additional connectivity of the unconnected people to the internet. So we believe just like 5G created that complementarity for the combined network, satellite will create that additional complementarity for the connectivity. While everything, even for the satellite part, the part about compute, the part about connecting to content and data centers will continue to happen through ground bases, which will beam to the satellite image, even for the rural and unconnected connectivity. So we believe it's all complementary and creates additional investment in the sector towards creating networks.
Sure. Thanks, Anand. Ladies and gentlemen, due to the paucity of time, we are now coming to the end of question and answer session. And I now hand it over back to Dr. Anand Agarwal for closing remarks.
Thanks, Pankaj. I'd like to thank everyone for attending this call, as well as for showing interest in our company. And I hope that we were able to address and clarify all your queries and comments. For any further discussions and questions, we can contact our investor relations team, which includes myself and Mihir, and we really look forward to continuing the conversation. And I would again really wish and hope that everyone stays safe and healthy. And thank you, and good evening.
Thanks, Dr. Anand. Thank you all of you for attending our call. Viraj, you may end the discussion. You may stop the recording now. Thank you.
Pankaj, you're there, no? We can talk, Mihir, couple of minutes just.
Yeah, Anand, just a second.
Wait for some minutes, sir. Attendees are
Sure.
going out.
हाँ विराज एक बार बोल दो यहाँ पे कि इट इज बेटर टू यू सेंड अ डिफरेंट लिंक है ना